all of those are gone. All of those are gone. No central banker worth their salt. I mean, just on a trade basis, you'd be nuts to hold major reserves in the yen, in the euro, in sterling. It's not going to happen. So you're going to be forced back into the dollar. But like you said, and the past 5 years has shown this, 10 years has shown it, you can have that going up along with gold. What we're seeing is that the real movement is coming up in the central bank world of people moving towards gold, especially outside of the G7 arena, because they also don't have a choice. So you can see these kind of chaotic pockets of people trying to move around, trying to come up with things. And of course, one thing you're seeing on the back of that is a very, very new, movement to hard assets, trying to find a neutral reserve. It's not really working out as planned. And so people are doing the next best thing. And this is worth remembering too, that this is not just a gold and silver game.
Hey everyone, welcome back to the channel. So I just came across this conversation between Peter Carlin and the host of Monaco 64. And let me tell you, this is the kind of discussion that could completely change how you view what's happening in the precious metals market right now. Peter's breaking down why silver just experienced one of the most violent shakeouts we've seen in years, dropping 32% in a single week, while gold barely flinched. He's explaining exactly what this means for anyone holding physical metals, and more importantly, he's revealing the liquidity crisis that's quietly unfolding behind the scenes that most retail investors have no idea about. You're definitely going to want to stick around for this entire breakdown because the insights he shares about market manipulation, central bank behavior, and where we're headed next are absolutely critical. And hey, drop a comment below and let me know where you're watching from. I love seeing our global community come together on these topics. All right, let's dive straight into this.
Silver, I still think, a lot of games being played. It's one of the favorite hangouts in the world for game players. I can't think barely of another market except for something like light aromatics in the petroleum game where things like this happen. But that's silver for you. Like I said, if you go on a date with a psychotic girl, you never know what's going to happen.
Monaco 64, home of alternative economics and contrarian views. So it's Thursday, February 5th, 2026. And it's around 8:20 a.m. London time. And I've got Peter Carlin back on. He wanted to talk about the market action in gold and silver. And it's certainly not boring, right, Peter?
Not at all. Quite the overnight out of the East. We've come well off the highs from silver now in two big segments down, looking for the bottom, and now we've got a 7 handle on this, and I would say that we've cleared out both sides of the arena. We've cleared out the weak length who chased on the way up, and we've also seen a lot of the people who we're shorting all the way up, got probably stopped out at the top. So silver, I still think, a lot of games being played. It's one of the favorite hangouts in the world for game players. I can't think barely of another market except for something like light aromatics in the petroleum game where things like this happen. But that's silver for you. Like I said, if you go on a date with a psychotic girl, you never know what's going to happen. Of course, the real point too is if you look at gold, nothing really happened.
No.
Gold has just been steady and right in there, off maybe 1.8%. But if we go to that second chart system that I sent you, that's going back to when we talked a week ago. When we started to move down, when we had the first big move down.
Is that the one with the touchdown that you wrote?
Touchdown, yeah.
Let me bring it up.
And
this one?
Yeah, that's a week old now. You can see where we were. We were at 51.77 on that chart. And I was looking for 5,000 if it broke for the market to touch down on 4,500 and then stabilize or reverse and stabilize. And we got almost exactly there. We came a little bit through, but we did not get a close. Important to remember, we only went intraday below 4,500. So please remember that's chart that you're looking at is a week old, but the indication of the 4,500 touchdown worked just on a simple trend line. And here we are now, stabilizing. Where are we on gold now?
Let's have a look. I'm gonna I think we're at 49.33.
Right, 49.33. There
Only
we are.
down $28 now. I mean,
Right.
the low.
Nice and steady. If you remember back in December when we were talking, I said, I think we're going to get to a point where the gold silver ratio is going to flip, but it's going to take a few weeks. Well, here we are. We flipped. And what I think, is the most salient point, the most important point, as I'm sure you remember from Jim's famous aphorism, thou shalt not chase strength in precious metals. So, if you did any of the hallmarks.
This is exactly what everyone needs to understand about silver right now. Silver just dropped 32% in a single week, while gold barely moved. This is classic silver behavior. The market cleared out both sides. Weak hands who chased on the way up, and shorts who got stopped out at the top. The big players know retail chases momentum. They know people see silver ripping to 115 and think they're missing out. And that's exactly when the rug gets pulled. Here's the critical lesson. Thou shalt not chase strength in precious metals. When you see lines around the block in Thailand, Singapore, Hong Kong, when FOMO reaches peak levels, that's not your signal to buy. That's your signal to wait. The crowd is always wrong. But here's what's fascinating. While silver had its manic episode, gold sat steady just under $5,000, down only 1.8%. That tells you the real story. Gold shows you what institutional money is doing, holding firm, not panicking, staying in the channel. This is not a crisis of confidence in precious metals. This is a crisis of confidence in paper silver specifically.
Yeah, I mean, the dollar is around 157. It seems to be pretty, not doing much at the moment on a monthly basis, but yeah, it looked like the dollar topped around 160. So we could see. You think the dollar is going to weaken further versus the yen? Is that what you mean?
No, I don't.
Oh, okay.
I don't. Just the opposite.
Well,
I think the yen is absolutely toast. And I don't think any kind of machinations by the Federal Reserve are going to change that. This is the theory that we're getting into the stage now where you're going to see precious metals and the dollar move up together. There's nowhere else to go.
Yeah.
There's nowhere else to go. I mean, you can't have the entire world putting all of their reserves into gold. They can't go where they should go, which is the yuan. They should be moving into the Chinese yuan, but the Chinese don't want that yet. They don't want it.
Yeah. And I mean, if you look back to 2008, the dollar bottomed at 70.69, roughly dollar.
Right.
And gold was at 1,000. And now we're at 5,000 basically, and dollar index is around 100. So like you said, the dollar and gold can go up together, but
it just has, like you said.
Yeah, and gold will go up a lot faster versus the dollar than the dollar.
Absolutely.
Yeah.
Absolutely. So I don't know, we still have the same problems, the continuation of the sanctions regimes, which are doing nothing. The weaponization of the SWIFT system, which is causing people to kind of manically look for other places to put reserves. We used to live in a world where we could people could put reserves, governments could put reserves in the yen, in the sterling, in the D-mark, now known as a bad version of the euro, and all of those are gone. All of those are gone. No central banker worth their salt. I mean, just on a trade basis, you'd be nuts to hold major reserves in the yen, in the euro, in sterling. It's not going to happen. So you're going to be forced back into the dollar. But like you said, and the past 5 years has shown this, 10 years has shown it, you can have that going up along with gold. What we're seeing is that the real movement is coming up in the central bank world of people moving towards gold, especially outside of the G7 arena, because they also don't have a choice. So you can see these kind of chaotic pockets of people trying to move around, trying to come up with things. And of course, one thing you're seeing on the back of that is a very, very new, movement to hard assets, trying to find a neutral reserve. It's not really working out as planned. And so people are doing the next best thing. And this is worth remembering too, that this is not just a gold and silver game. We're seeing the whole metals market, the whole spectrum move up as people start scrambling for anything tangible that could be related to long-term industrial development and national security. So that's why we've got cobalt up. That's why we're going to start to see, a lot of the other metals, platinum up, palladium's up, over about 100%, I believe, year on year. And, for me, the next big one's going to be nickel. But I did want to say one thing about the gold chart that we looked at when we started here. I said back about a week ago that we were going to come back into the channel, and we are in the channel. And that channel now is got to be what we look at and what we really pay attention to.
Peter Carlin just laid out one of the most critical market dynamics that mainstream analysts completely miss. When he said there's nowhere else to go, he's talking about a liquidity crisis unfolding across global reserve currencies. Central banks used to have options: yen, sterling, Deutschmark. Those days are gone. The yen is getting destroyed. The euro has structural problems. Sterling is a shadow of what it was. The weaponization of the SWIFT system has created a manic scramble for alternatives. Countries are panicking, trying to figure out where to park reserves without getting frozen or sanctioned. This is why we're seeing both the dollar and gold rising together. Look at the data. 2008, gold was at $1,000, dollar index at 70. Now, gold is at 5,000, dollar index at 100. They've both gone up because there's genuine scarcity of trusted reserve assets. And here's what's critical. This is not just a gold and silver game anymore. The entire metals complex is moving. Cobalt, platinum, palladium, up 100% year over year. Why? Because the world is fracturing into two economic camps, and countries need strategic stockpiles of critical minerals. This is national security policy playing out in real time.
And that channel is holding. And if you look at the up down on it, it worked perfectly. We have a channel there. That channel, the slope of that line equates to, I don't know, I'm just eyeballing it. Roughly, over a year, it would be equivalent to $2,000 in gold. So if we're in that channel, and we are, and that's a snapshot of this morning, if we're in that channel, we're fine. In my book, we're just moving up. All the rest is noise.
Yeah, I guess it got ahead of itself here a little bit.
Exactly.
And then, so now the resistance seems to be, I think the high yesterday was just below 5,100.
Right. So you can see with that last bar on this weekly, we've tested the high and the low of the channel within the week. There we are, there and there. It's really not rocket science. If you want to panic about what's happening with gold, wait till we lose the channel and then re-examine it. As long as we're in that channel, we're fine. We're moving up and quite honestly, moving up strongly. As a matter of fact, I would expect that channel eventually to give away, but I can't see anything that would indicate that this is the end of the bull market. As a matter of fact, gold's performance in the past week through all the chaos has been nothing short of stellar. We are here at $5,000 and we are not budging. Gold is not moving. So, we look at where we were 2 years ago. Let's everybody get some perspective. Let's get some perspective on this thing. We were talking sub 2000, and now we're up here at fives and holding nicely and firmly. I don't see why anybody's panicking. What we just witnessed was the usual silver games. It's games in silver. That's where the game players hide out.
I wanted to bring this up here. Hold on. It's the because have you heard of course of Pierre Lassonde?
Sure, of course.
Because
Franco Nevada,
very
great man.
Very successful,
very.
And he's always said, and I listened to him in Zurich a few years ago. He made a speech. He always said that he's looking for a Dow Gold ratio 1-to-1, and that's why, like you said, I think we're nowhere near the end of this bull market. And actually, we've tested the 10 level, which isn't really that important, but it's just like a round figure.
Right. Exactly.
This trend line here is broken. And interestingly as well, it was in the other one, in the S&P gold ratio. There was a really key support from 1929 that we broke. But yeah, to me, when this goes near 1-to-1, it will mean that all the the rebalancing from paper assets to hard assets has been completed, and then we can have another huge credit cycle. But
that's probably true.
Yeah,
I don't know, but it's going to have a very different flavor to it this time, because it's not going to include the rebuilding of Europe. It's not going to include the EU, and a lot of the peripheral countries are not going to be participating. I would just say, no matter what anybody thinks, we are still witnessing the gradual movement of the financial center of the world, although it has not happened, and it's going to take a lot more time, like another decade. We're moving to China. Hong Kong's got a record number of IPOs.
Yeah, west to east, and I think Hong Kong. I've been told by Eric Young, who I've interviewed, and he lives there, King Kong. He says that they still follow the English common law.
Here's something most silver stackers don't think about until it's too late. Peter just exposed a massive liquidity problem in the physical silver market. During that spike, people in the US who tried to sell physical silver to local coin shops got turned away or offered terrible prices. Why? These small shops don't have the capital or refinery credit lines to handle large transactions. But here's what's interesting. Dubai and Singapore were buying spot throughout the entire rally. Walk into a gold shop in the Dubai souk and you'll see tens of millions of dollars in inventory with full banking facilities ready to hand you cash immediately. That's real liquidity. The U.S. retail precious metals market is not set up like that. So if you're stacking in the U.S., you need an exit strategy that doesn't rely on your local dealer. Now, let's talk about the bigger picture. When Peter said gold acts as a barometer of confidence, this is the key insight. Gold is a thermometer measuring trust in political and financial systems. And right now, that confidence is eroding. The world economy as a globalist entity is not coming back. Countries are grabbing critical minerals now and hunkering down for a decade of deglobalization. The era of just-in-time global supply chains is over. So what do you guys think of this? Leave your thoughts down in the comments. Please like and subscribe, and I will see you in the next video.